Hey, everybody. Welcome to the Confident Retirement Podcast, brought to you by LBF Advisors. I'm your co-host, Chris Flaming, here with me, and I have my other co-host, my sidekick, Collin. Hey, Collin.
Hey, everybody.
Today, we're diving into a topic that can put real money back in your pocket, tax savings tips. I know everyone's excited. We'll cover some simple strategies, won't take too long, to help you keep more of what you earn, whether you're self-employed or working 9 to 5 or you're managing your investments. But first, a quick disclaimer. The information we're providing is opinion and not necessarily that of our firm or this platform. It's general information and not any customized investment recommendations. Nothing should be construed as financial, tax, or legal advice or recommendations. You should consult with your own financial professionals for that stuff. So, Collin, nobody likes to talk about taxes unless it's a way to keep more of what we earn. So let's jump right in. The first one, tax savings tips, is maximizing your retirement contribution. So how do we do that?
Yes, Chris, thank you again for having me. And so one of the easiest and most effective ways to save on taxes is by maximizing your contributions to retirement accounts. So if you have a 401k or a 403b through your employer, we want to try to contribute up to the annual limit for 2024. That is 23,000. And if you're over the age of 50, it's 30,500. The money that you contribute isn't taxed until you withdraw it in retirement, reducing your taxable income today. So we don't want to forget about IRAs. You can contribute up to 7,000 or 8,000 if you're 50 and older to a traditional IRA. And if you don't qualify for the tax deduction on those contributions, we can consider a Roth IRA where the withdrawals in retirement are tax-free. Every dollar that you put away grows tax advantage, so it's a win-win for everybody.
Okay. And just on a high level, I do want to mention there's some income restrictions in terms of IRA contributions if you make too much money or if you're participating in another employer-provided plan. We're not going to go into that stuff today, but we could always talk about that if someone had a one-on-one session with us. And we do plan to compare and contrast Roth IRAs and traditional IRAs in a future episode. So look for that on our website or on our YouTube page. All right, so Collin, next, how about health savings accounts or HSAs? People hear a lot about those. Talk about those.
So if you're enrolled in a high deductible health plan, you can contribute to a HSA or health savings account, which offers triple tax benefits. Wow. So the contributions are taxable. The growth is all tax-free, and the withdrawals for qualified medical expenses are also tax-free. So for 2024, the contribution limit into an HSA is $4,150 and $8,300 for families, with an additional $1,000 catch-up contribution if you're 55 or older. And even better, if you invest the money in your HSA, letting it grow over time, it supercharges your retirement accounts, especially for healthcare costs once we start needing to dip into our own pockets. And the key for verifying whether you can enroll in your HSA is if you're in a high deductible plan.
Yeah. So you have to have a high deductible health insurance plan that offers an HSA in order for you to do that. So not everyone can do an HSA depending on where they work and the coverage that they have. And just to quickly clarify on that, the contributions are tax deductible, the growth is tax-free, and the withdrawals for qualified medical expenses are also tax-free. That's where they talk about that triple tax benefit thing. Everybody likes a 3X. All right, so on an investment front, just on investments, what are some tax savings things that we can do there? There's this tactics called tax loss harvesting. So talk a little bit about that and give us the lowdown.
Yeah, this is actually one of my favorites, one of the easiest ways to help us save on taxes. But for those with investments in taxable accounts, so money that's outside 401ks, outside IRAs, tax loss harvesting can be a powerful tool. So this strategy involves selling investments that have lost value to offset any gains that you have from other investments. So you can use up to 3,000 net losses each year to reduce your ordinary income, and any unused losses can be carried forward for future years. Just watch out for the wash sale rule, which means if you buy that same stock or same investment vehicle within 30 days before or after the sale, this tactic can lower your tax bill while keeping your overall investment strategy intact.
Okay, yep, so watch out for the watch sale. You don't want to get caught up with that. And you can carry over up to 3,000 in losses per year until you use it all up. And we do have some clients that we work with that have some pretty high capital gains if they were to sell things. So this is a common tactic that we're using with those people. Okay, well, we don't want to leave out business owners. So there's some things that business owners can do that are unique to them from a tax savings standpoint. So how about deducting work-related expenses if you're self-employed?
Yeah, there's your question. So if you're self-employed and you've got a range of deductions at your disposal, so you can deduct a portion of your home office, business travel, meals, and even internet and phone bills if they're business related. And we don't want to overlook the contributions to a SEP or a solo 401k, which would allow you to set aside more for retirement with higher contribution limits than traditional IRAs or Roth IRAs. Mm-hmm. So we also want to consider setting up a defined benefit plan if your income is particularly high. These plans allow for substantial contributions and the tax savings can be significant. There are also retirement plans specific to businesses that can drastically reduce your tax liability. And we plan to do future podcasts on this topic.
Yeah, we'll do another session in the future on retirement plan options specific to businesses and business owners. We can do a deep dive on that. Okay, and finally, when it comes to tax preparation, what do we generally suggest for people?
Mm-hmm. So while do-it-yourself tax software has made it easier than ever to file your taxes, working with a tax professional is always recommended. They can uncover strategies that just the average person might not be aware of, especially if your financial situation is complex. A good CPA can help you navigate changes in tax law, which is ever changing, and ensure that you're maximizing all available deductions and credits.
Okay, so covered a lot of ground, really high level stuff. Plan to do some deep dives into some of those other topics, but I just want to remind everybody that tax planning doesn't necessarily have to be overwhelming. You can take advantage of some of the stuff that we talked today to significantly reduce your liability, keep more of what you're making of that hard-earned money. So if you found the episode helpful, be sure to subscribe, share it with a friend, or leave us a review. Check out all of our educational videos on YouTube by searching LPF Advisors, Larry Paul Frank, or going to our website at www.lpfadvisors.com. I want to thank everybody for tuning in today to the Confident Retirement Podcast brought to you by LPF Advisors, where we hope to raise the financial confidence of everyday people to another level, one show at a time. Thanks, everybody, for tuning in. Collin, thanks a lot.
Thank you, Chris.
Yep, we'll see everybody next time.
You've been listening to the Confident Retirement Podcast with Chris and Mark from LPF Advisors. For more information on them and retiring confidently, please visit lpfadvisors.com. If your ears are pleased and your mind is now at ease, do share the program with your friends and subscribe wherever podcasts are found.